Hey guys, what's going on? This is John from Friends of Your Benefits. Today we're going to talk about everyone's favorite benefit topic out there, long-term disability. Today we're going to discuss what long-term disability actually is and what you need to know before you decide to purchase the coverage. Stay tuned. Long-term disability insurance is designed to provide income replacement for, as the name suggests, people who happen to have a long-term disability or illness. Now, this is important because if you happen to be out on disability, you're going to need money to pay your bills and to continue to provide for your family. And in return for the benefit, you or perhaps your employer, or maybe both, will pay a monthly premium. So let's jump right into what you need to actually know about long-term disability insurance, or LTD for short. So first things first, let's start with what the actual benefit is. So it's very typical to see benefits out there for LTD range anywhere between 40 to 70% of your monthly earnings. Now, if you happen to get your LTD coverage through your employer, it's very common to see the plan design be a 50 or 60% benefit with a $10,000 monthly maximum. So what does it actually mean, John? So here's a real world example. Let's say you earn $5,000 per month and you happen to have a LTD policy with a 50% benefit. If you happen to go out on LTD, your monthly payment will be 50% of $5,000 or $2,500 per month. Now, I mentioned before that LTD plans generally have a monthly maximum on the underlying benefit that they will pay out. So let's give a real world example. Let's say you happen to get your LTD coverage through your employer and it's a 50% benefit with a $10,000 monthly maximum. And let's further assume that you happen to earn $25,000 per month. Now, your underlying benefit, or the payment that you'll receive from the insurance company, won't be 50% of $25,000 or $12,500. It will actually be $10,000. So believe it or not, you'll actually receive a 40% benefit, and this is a gap out there that many people miss. And if you happen to have a plan with that provision in place, you may need to purchase supplemental coverage to eliminate any gaps in coverage. For employers out there, now is the time to take a look at your underlying disability plan and determine how many people are subject to that monthly maximum. With inflation rising, it may be time, once you identify that number, to either increase the monthly maximum or perhaps purchase additional or supplemental coverage for those who are impacted by the monthly maximum. Now, let's talk about an important concept called the elimination period. The elimination period is important because it determines when your LTD benefit actually begins. Think of the elimination period as a waiting period or perhaps a blackout period, and while you're in the elimination period, you actually won't receive an LTD benefit. It's most typical to have an elimination period be 180 days, but sometimes in the marketplace you can have LTD plans with a shorter or 90-day elimination period. The shorter the elimination period, the higher your monthly premiums will be. If you happen to work for a large employer, it's likely that the employer will provide a separate short-term disability insurance policy, which will likely cover the full elimination period that the LTD policy has. Now, if you like what you're hearing, make sure to like the video and be sure to subscribe. A question that we commonly get out there is LTD considered a taxable benefit? Well, the answer is, honestly, it depends. While we don't provide official tax advice on this channel, here's a few things you should know about LTD and taxes. So, number one, if your employer happens to pay for the full cost of LTD, it's very likely that any benefit that you receive will be fully taxable to you. Let's give another example. Let's say your employer offers you LTD coverage and they give you the choice. You either pay for your premiums on a pre-tax or perhaps on a post-tax basis. So if you pay for your premiums on a pre-tax basis, if you happen to utilize the underlying LTD benefit, when you receive any payments from the LTD insurance carrier, those benefits will be taxable to you. Let's talk about the flip side. Let's say you happen to pay for your LTD on a post-tax basis. And let's say you decide to use the LTD coverage. If you happen to go out on LTD, the benefits in that case, believe it or not, would come to you totally tax-free. Another thing that you should know about your LTD policy is that it likely includes, believe it or not, a pre-existing condition clause. Now, the pre-existing condition clause is typically a 312 pre-X. What that actually means is, let's say you have any underlying illness or injury 3 months prior to the effective date. If you happen to go out on LTD for those specific illnesses or injuries during the next 12 months, they would not be covered under your LTD plan, and that would be a gap in coverage that you would have to self-insure, unfortunately. In addition, many LTD plans have what is known as an any occupation or any OC clause. What does that mean, John? So here's a real world example. Let's say you're a dentist and you purchase an LTD policy and it has the any OC language. So let's say in this example, you're the dentist and you happen to really injure your hands and you're no longer capable of being a dentist anymore because you rely on your hands for the vast majority of your work. So typically what will happen in that situation is the plan will cover the first 2 years of injury, and then after that, if you are capable of doing a different job, perhaps working at Walmart, the NEOC clause will kick in and the LTD policy will stop paying you a monthly benefit. Now, this compares to an own OC clause, which is the most generous clause out there, which means that if you're no longer capable of doing your own job, the only way the LTD policy would stop paying you a monthly benefit is if you're unable to do the duties of your own job, as opposed to any job that is out there. And in return for having this policy provision, you or your employer will likely pay a higher premium. Now, another question that I commonly get is, hey, John, how long does the insurance carrier happen to pay you a monthly benefit if you happen to go out on long-term disability? So I'd say in general, the average disability for someone who happens to be on LTD lasts about 2.5 years. But let's say, unfortunately, you are permanently disabled. In that case, the insurance carrier will pay you a benefit until you turn either 65 or 67 in some instances, depending on the underlying policy. And the thought process is when you turn age 65, that's normal retirement age, and that's likely the age you would have retired if you weren't permanently disabled. An additional thing worth knowing about your underlying LTD policy is what the definition of earnings actually is. Most LTD plans out there will cover your base pay only, but some may be a bit more generous and may cover your base pay plus commissions or perhaps bonuses. In return for the more generous definition of earnings, the higher your monthly premiums will actually be. Let's talk about what LTD actually costs. So if you happen to get it from your employer, it may be that your employer will cover the full cost of LTD that we mentioned before. But absent that, it's very common that LTD will cost you about 1 to 3% of your annual covered salary. In terms of how the premiums are calculated, so the younger you are, likely the lower the underlying premiums, and the older you are, the higher the premiums, because if you're older, it's more likely that you'll incur an LTD claim. From there, you'll likely see, if you happen to purchase LTD coverage on the individual market, that rates are expressed per $100 of coverage. So here's a quick, simple example. Let's say you see a plan out there that has a rate of 50 cents per $100 of coverage, and let's say you're making $3,000 a month that you wish to insure. So the way the premium's calculated is it's 50 cents times 3,000 divided by 100, and there, in that example, your monthly premium will be about $15. Now, we want to hear from you guys. What else do you need to know about LTD coverage before you decide to purchase it? Comment below.